Hi, everybody. I didn't know I was the last speaker. That's dangerous. All right, okay. I'm actually really glad that I'm going after John because John hit the nail on the head. I'm also a alum, by the way, from Erasmus. But John really hit the nail on the head on a lot of the aspects of production efficiency um, that we look at as economists as well, right? Because that's what affects your bottom line. So um, I'll jump into this here and we'll start talking about it. Really, I want to give a little bit of background. So a couple of years ago, USDA ARS approached us and said exactly what John was saying. We've overcome these technical barriers, right? We know that we can produce these fish. What's happening? Why is there no industry maturing around this technology, right? And we said, that's a really good question. Like, yeah, that we're gonna have to take some time to look into this. So we've done a series of analyses really over the last couple of years to try and chip away at this. And I'm gonna tell you up front, I don't have like the magic answer, like this is it, right? Like here it is, we fixed all the problems. No, right? But we tried looking at a couple different things. And so you're gonna hear some common themes, I think, between what John had to say and what I'm gonna say. We looked at the supply of marine finfish, and when I say supply, I do mean all sources, right? Imports, commercial landings, recreational landings, because people do catch and eat fish, right? So, and aquaculture, right? We have a report out on that that's available. We looked at consumer preferences, right? We did some consumer work as well as distributors. We approached distributors and asked them about preferences because, to John's point, who moves the product? It's distributors, right? So, and then, last but not least, we left it for the very end because we were dreading it, was estimating grow-out costs. And I will say that the reason that we dreaded doing this is because there is not a lot of information out there because guess what? Not a lot of people are doing this at a commercial scale. So it relies on a lot of assumptions and a lot of interviews with experts, people that are, some of you are here in this room that we've talked to. So I'm gonna put a big caveat on this and say what you see here, right, is based on the assumptions. What you're gonna see here today is based on the assumptions and the information that we had when we did this analysis. I don't want anybody leaving this room thinking that this is set in stone. And maybe I'm kind of foreshadowing that I don't have good news. Anyway, so just a reminder for those of you that this was the list of species that we've been working with for this entire series. This was provided to us by ARS. So some of you have worked with these species and will recognize them on this list. This is the paper that I'm going to be talking about. And I am not going to have the time here today, even though I am the last speaker, I am not going to have the time here today to dig into every detail and every economic analysis and scenario that we did. So feel free to look up the paper if you want more information, okay? The goal was really to estimate these production costs. The choice of specific species and production systems was based on a couple things. One was the suitability of environmental conditions within southern tier states of the United States. The other was the degree to which regulations might prohibit certain species from being farmed in the region. And then the last was, do we have enough grow-out data from either attempts at commercial scale or from university publications and ongoing research for us to even try and come up with some estimates, okay? We did develop separate models for coastal ponds, wrasse, and net pens. And this is kind of how we categorized those different species based on the information that we found for what technologies may exist and may be suitable for these, okay? This is gonna come back in a minute when I talk about profits, or estimated profits. But essentially 10 species in coastal ponds, 13 species in wrasse, 5 species in net pens. We did 4 different scales of production for each system. At the end of all this, and this is why I don't have time to go through each and every single one, there were 112 different scenarios that we looked at, right? So that, I mean, that would be like a week-long class if we went through it. So So I'm going to summarize all of that for you, okay? And I'm going to put this slide up. And on the right, which I should have kind of switched those around, seeing as how I'm starting on the right. But anyway, on the right, we basically identified the major cost of those systems for the species that we looked at. And this is kind of across all of them, right? So general, right? And that shouldn't look really strange to anybody, I think, in this room, right? Like this is kind of, we know this, right? So, all right, that means our model somewhat aligns with reality. The other thing we looked at was fixed costs, right? And I mean, we really looked at fixed costs because we know that capital is the number one cost with RAS. So you can see there, based on our 112 scenarios that we modeled, kind of where the mean came in and the range. RAS, 31% to 82% of fixed cost as a percent of total cost. That's significant, right? And then especially when you compare it to ponds and net pens on this slide, that's a different level, right? So that really highlights kind of the importance of thinking about the capital costs of your system. Now again, I will say the results vary by individual species that we looked at, and I do want to point out that capital is a fixed cost. So when you're doing your economic analyses, make sure to include that in there, because essentially it becomes annual depreciation, right? It's your annual depreciation on your capital investment. So in the paper, we go through each and every single species, and it's all described there in quantities of what the actual dollar estimates are for each one. So if you're interested, please do look at the paper. I will have the QR code that comes up again at the end for those that didn't snap it. But all right, let me make sure I said everything I had to say about this. Yeah, I did. Okay, good. All right. Jumping ahead kind of towards the final conclusions of all the analyses. The results of our analysis show that regardless of species, coastal ponds and net pens were the most economically feasible, right? I'm going to preface right now again and say that that does not mean that RAS will never work, right? That's based on this analysis with the information that we had. But what we did see were that RAS production costs were 2 to 5 times greater than net pens or coastal ponds. And so I think that's important, because one of the things we saw was that to improve the economics of RAS and get it closer to feasibility in our analysis, it really requires higher density. So it's really getting a better kilograms per cubic meter out of a production tank and not necessarily going for a bigger overall scale of production. And I think that kind of dovetails nicely with what John had to say, which was if you're inefficient, scaling it is not going to help you. You are just going to lose more money, right? You're not going to scale your way out of inefficiency, right? So what is the metric for yield that we look at in RAS? Kilograms per cubic meter, right? And that's what our analysis essentially shows, that if you can bump that kilograms per cubic meter, then that RAS starts to become profitable in these estimates, right? Now, we didn't do that in some of these because we couldn't find substantiated evidence to say that those levels were possible in production, right? Now, I know from anecdotal evidence that some people are packing fish like you can walk across the tank, right? And they're probably making that cash flow, right? But what we could find in literature that we could reference and cite and responsibly say, this is the source, just didn't show any profitability with RAS, okay? Another thing I want to say about that is total farm production scale really needs to be a decision that's based on your market and your price point, right? Again, going back to the idea of you cannot scale your way out of a production inefficiency, right? So you build the farm as big as you need it to be for the market that you're trying to serve and the price points that you want to hit. Then you go back to your production efficiencies, which John talked about at length and listed them, right? And try and improve those metrics. And that's where you build that margin, okay? And that's what we are seeing in our analysis as well. All right. I know that I said ponds and net pens. And I know that there's probably at least somebody in the room thinking, yeah, but what about the environmental impacts? And you're not wrong. But, quick plug, if you haven't seen this paper, please do look at this paper. This was a very interesting project that we did. And I want to acknowledge Carol and Ganesh, because they really led the way on this. But this looked at resource use efficiency across different production systems, and you may be surprised what you see about ponds or net pens in these results. So I'm not going to dig into this right now, but it's not all bad, right? That's where I'm going. Okay. It's kind of stalling with this one, so here we go. Profitability. Green means yes, red means no. Okay? Again, I will say, as I mentioned at the beginning of this is based on our analysis, based on the assumptions that we made, which are all outlined in the paper, the information that we had available, right? So I don't want anyone leaving here thinking RAS will never work, because that's not what I'm saying, right? But I'm saying with what we had in terms of information right now, it was not profitable with these assumptions. But going back to my earlier comment, the key is average tank yield, kilograms per cubic meter that comes out of a tank, right? And not just scaling the farm itself to be bigger and bigger and bigger, all right? So I really want to make that point. And I'll just throw this nugget out there to say that, again, over 50 kilograms per cubic meter, right? That and above is where we started to see this changing. Okay, so you gotta think really high densities for this to be profitable in RAS. All right, recommendations. I have a lot of these because after doing all these different studies, looking at the supply, looking at the consumers' data, the distributor data, and then going through this economic analysis and these estimates. We also came up with some recommendations, right? And one of the challenges we had is because so little research has been done in ponds and net pens in the US, we had to rely on a lot of data from other countries, right? So I think there is a strong need for some of these production grow-out trials to look at considering doing work in ponds and net pens. Trials need to be done under near commercial production conditions, whether it's RAS, tanks, ponds, doesn't matter, that really have similar water quality characteristics. Again, doing something in a research system is great, but exactly what John said, research isn't commercial, right? So just because it works in a research system doesn't mean it's going to work in a commercial system. So what we need to do is make our research systems look like commercial systems, right? And maybe that's something the federal government can help with, because we have that with salmonids, right? We have the Freshwater Institute that does commercial scale work for freshwater. How much time I got? 2, all right, lots of recommendations. I'll just put this one, I'll run quickly through this one. Again, this is basically size thing, right? Like we need to be looking at the appropriate sizes. And again, thinking about stocking densities. Again, that was a big thing. I mean, I'm not saying it's not a thing in ponds or other systems, but in RAS, that was one of the major sensitivities, was that density. All right, future analysis that can be done or should be done that we identified. And I really just put together a list of questions. I will say these are all in the paper. At the end of the paper is the list of all the questions that you're about to see that we have put out there so that our funding agencies and our government partners can mull these over and think about, okay, is this a project we can fund to try and answer these questions, right? What scale of production is it more profitable and efficient to construct a hatchery as part of a farming business, right? One of the analyses we tried to do was, what does it cost you to build a hatchery? It is very, very, very expensive. But it's an entirely other question is, how big does your farm need to be for it to become worth it for you to have your own hatchery, to be vertically integrated? And we just don't have the answer for that yet, right? We don't have enough data to come up with that answer. What are the optimal stocking densities for various stages of sizes of fish? That's ongoing work, right? We're always working with new species and new systems, and that's something that there's room for improvement. Most cost-efficient allocation of ponds, tanks, net tanks to juvenile or stocker production before transferring to a grow-out. Again, these are questions that we as economists have that there's not enough data to answer at the moment, but hopefully with more research, we can try and get some answers to these things. Optimal harvesting and marketing strategies given trade-offs related to incorporating packing, processing, transportation, and expertise. So again, thinking more about that vertical integration, right? How do you optimize across these different entities that are really, can be separate corporate entities within a business, right? How do you make that flow seamlessly so that you're getting efficient at every step of the process so that your end goal is a better margin? Optimal strategies to successfully manage cash flow, especially during the difficult startup years, right? Adequate capital. I know that's something that folks have heard over and over and over again, but it really, really is important because especially when you, again, think back to that earlier slide, what capital is in RAS, right? And if you don't have adequate capital, then you're not gonna make it, right? You need to have that adequate capitalization. Probability of losing money for various species, production systems, and scale. We do scenarios, and I have a student here who presented the other day and it was on shellfish, but essentially looking at probability of profitability, right? And running different scenarios and 100,000 scenarios and Monte Carlo simulations, and you get this nice probability curve that tells you, hey, your chance of profitability is this high. But again, having the data to do that kind of analysis for all of these species will help us answer more questions. And finally, this is my last slide of analyses topics. Which variables contribute the most to probability of losing money, right? Which are the variables that contribute the most? Now, again, for RAS, our analysis suggests kilograms per cubic meter. That's a big one, right? But there's others. There's gonna be others, right? So what are they for ponds and net pens and RAS, right? So again, we need more research to answer that question. Lower risk. Risk is an interesting thing because risk is both species, system, location, market, right? Dependent, right? All of those things contribute to risk. So it's really kind of a localized analysis that needs to happen there. And then which production management strategies entail greater risk than others, right? So again, that's when there's hardly anyone doing it at commercial scale, there's not really any room to compare one management strategy to another. So again, as more people get involved, that may be something we could look at. So I just want to acknowledge ARS for the funding that supported all of this work. And this is the QR code, again, for the paper that goes into greater detail in case anybody didn't snap it earlier. Like I said, there's a lot in the paper with 112 different scenarios. So I didn't want to, I took long enough up here. So I didn't want to run through all of them. Well, thank you. You got me. I don't remember. It's in the paper. Not 200 miles. Yeah. Yoni.
Very nice presentation and well-needed information. The point about in RAS pushing, densities is obviously well taken, but I think it's a double-edged sword.
Yeah.
Because I think that some of the failures were because whatever companies overpromise and under-deliver. So it's very easy to say we're going to grow 90 kilograms per cubic meter and so on, but to deliver is a different story. So I think it's
Yeah.
needs to be understood.
You're absolutely right. No, I agree with you on that. And I think, again, thinking about what John was saying, you do see that over time those costs have come down, right, of the system. And I think over time we're seeing technology improve. So there are opportunities, I think, where yield was the most sensitive in our analysis, right? But that doesn't mean that if you have better technology, right, and your system becomes more efficient, that yield can then also maybe be lower and doesn't have to be as high. But you're right, it is a double-edged sword because again, you're also increasing risk, right? The more fish you pack into a tank, the more your risk increases, right? So,
And it's an easy thing to state to investors, we're going to grow it
yeah,
90 kilometers,
yeah,
1 kilometer to deliver is a different story.
yeah, absolutely, yeah,
I would say, I don't know if you know yet, some of my customers, so I am a commercial marine manufacturer.
yeah,
But some of my customers who are successful and have been buying from me for years have a low tech brass system. So it doesn't have to be these super high capital intensive massive systems. I think some of these newer RAS companies that are coming on, maybe not the ones that you see splash with the hundreds of millions of dollar investments, the regular companies are doing this more lower tech RAS that are kind of flirted with, gone too far in one direction and going back to the other. And those systems seem to be competitive. I mean, they've been
yeah.
around for a while.
Yeah, no, and I think that's, again, thinking back to the point that I was trying to make around scale the system to the market, right? And that also means in terms of what technologies are you using, right? Like how much control do you really need, right? Yes, okay, we could control every parameter, but do you really need to control every parameter?
Well, and when you push the limits, that's when you're talking about, when power fails and you don't have that backup. If you're always using max oxygen and the power
Right,
fails, well, there's nothing to fall back on. So
right,
sometimes you need to back up.
yeah.
Stock limits need to be things.
Yeah, no, I agree. I don't disagree with that at all. I think you're right. And I think you're right. We are seeing, it's interesting. Someone was asking me about this yesterday. They said, what do you think about small scale and medium scale RAS? And I was like, yeah, I know there's examples of that are successful, right? So again, I don't want anyone leaving here thinking, oh, RAS will never be profitable. That's not what I'm saying. It can be done, right? It's being done by some people, right? But I think you have to think very carefully through each step because it's about production efficiency.
Do we have a question?
Are there any marginal increases by locating RAS in urban centers that are far away from coastal centers and costs?
We didn't look at that. We looked just at farm gate, right? So we didn't take it to the level of, well, now you're also adding transportation to a market or, because there are going to be differences in energy prices and things like that as well. So we just assumed kind of a standardized, and we didn't take it beyond the farm for this analysis. So I can't answer that question for you, sorry. I mean, there's, from a different project that I've worked on, I mean, again, that's also actually kind of a double-edged sword, right? Because, being closer to a market, okay, maybe your transportation costs aren't as high, but guess what? Your land costs are a lot higher, right? And your energy costs might be different. And you may have to put your water into municipal because you don't have another option. And those things are going to cost you more, right? So I think it really is site-specific, and that's why we didn't go to that level, because you really need to know the specific details of the location you're asking about to be able to determine how that's going to impact things.
Why there was such a big range of fixed cost in brass? I mean, considering different technologies, scale.
And different scales, different species, right? So different, yeah, exactly. So again, there were 4 scales of production for each system, for each species.
What was the biggest capacity?
You know what? It varied. It varied based on the species. So yeah, that's why I'm saying you really have to kind of look at the paper because I didn't want to put that. Nobody would be able to read that slide that had all the everything listed out. So, all right.
This was the last speaker of our session. Thank you everyone for attending. Thank you, Jonathan.